Good morning, ladies and gentlemen. Welcome to the Catalyst webinar series presented by the Education Committee for the Southern California PGA. The Catalyst webinar series is a bi-weekly educational platform for creating success and change in your club and career. We're very excited to have Kathy Brashears joining us this morning. She's a financial advisor for Corebridge Financial. Corebridge Financial, as many of us know, is a strong partner of the PGA of America and also supports us here at the section level. And Corebridge offers a wealth of services to PGA members that are included in our dues that I think a lot of us, including myself, are not aware of the extent of the services that they provide to us. And so Kathy's going to take us through a little presentation and enlighten us on the services they provide us. Kathy, thank you so much for making the time to join us this morning, and it's all yours.
Thank you, John. Hi, everyone. Hopefully everyone's having a good morning. I know it's a little early for y'all. I'm over here in Florida, so I've been awake for a few hours. Just letting you know, I have been with Corebridge for about 7 years now, specifically working with the PGA group for 6 years now. So Golf Retirement Plus, I have been working with for a long time, and deferred comp for the 2 years that it has been being done through the PGA. My background, I have 3 children, used to be a special education teacher also. So now just helping all the PGA professionals get toward retirement, which is everyone's goal. So what I'm going to talk about is the 2 member benefits that are available to you, plus then the services that Corebridge Financial can offer you. Regardless of whether or not you do either program, Corebridge is here to help all the PGA professionals and associates get to retirement. So first off, we're going to talk about is the, and I am sorry if you can't see the screens fully, try to make them bigger. If you do have any questions, just let me know and we'll try and answer them or what you can't see. The first screen is showing the eligibility for deferred compensation and Golf Retirement Plus. So deferred compensation, new program, it's open to Class A professionals that are working in the United States. It is the new program that the PGA started, the 3rd year just started April 1st, and it is around growing the game of golf. So again, it's open to all Class A professionals working in the United States. Golf Retirement Plus, that is open to all PGA professionals and associates working in the United States. So this is open to all Class A and Class B professionals. That is one of the big things that is not widely known or remembered, that it is open to the associates in the program. So the PGA is creating the Golf Retirement Plus program to help people save for retirement. It was established years ago to help with retirement because a lot of PGA professionals didn't have the ability to save within 401k plans. So this is a way to help to save for retirement. Okay. For the deferred compensation program, again, it is based off of growing the game of golf. I am going to show you a chart later that you can find in your PGA member benefits section of these charts. The activities that the PGA has created in this program, they are kind of bound by the IRS on what activities can be included in this program. And it's basically activities growing the game of golf, PGA Junior League, drive, pitch, and putt, hosting section tournaments, etc. So it is set, the way deferred compensation works is that you are going to log in activities as you do them within 60 days of completion. This is a key point in deferred compensation. When you finish your activity, whether it be helping someone complete their membership, doing a HOPE event, etc., within 60 days of completion, you do want to log this in. You have to get it attested to by another PGA professional. That's usually through email or text messaging. And then you get the points for the program that you've completed. The goal is between April 1st and March 31st of each year. Activities that have been completed, you want to log in. You get a minimum of 200 points. you are then eligible to receive a contribution from the PGA deposited into your deferred comp account. That amount is right now maxed out at $1,500. There is a calculation. Basically, your deferred comp points will turn into dollars. And it all depends on how much money is allotted that year by the PGA for the deferred comp program, how many professionals participate, and then the points that each professional gets. So basically, the more points you receive in the year, the more chance you have of receiving that 15. So that's to $1,500 a year. There are 16 activities for the comp program, and then there's one inclusion activity for Special Olympics, first tee, etc. To different to make sure that those are read. And again, I'm going to show you that list in a little bit.
Hey, Kathy,
And then
Kathy, I'm sorry
deferred
to,
yes.
yeah, I'm sorry to interrupt. The last 15 or 20 seconds you kind of cut out substantially. Is there any way you could comb back through what you just said over the last 20 seconds?
Sure. Yeah, it's not sure. So basically what you want to do with the chart of activities is you want to make sure you read what's included in that activity, because they are broken down. So the one activity that's inclusive activities includes things like Operation 36, first tee, Special Olympics. So you want to make sure the activity you do, where does it fall in within this group of 16 activities the PGA has laid out for you. The points don't roll over. So you want to make sure when activities are completed March 31st, you log them in within 60 days. If you got 175 points, I'm sorry to say, you can't roll that over to the next year. So you just want to try and make sure you can get that minimum 200 points each year. Your deferred comp account, it goes into a mutual fund account, and you can't touch the money basically until you're 65. It'll just grow there. Each year you get that minimum 200 points, you'll get a new deposit. And then when you're 65, that's when you'll start getting distributions from the account, just so you know. And again, it's all people on Class A status. And then this screen, basically I've already reiterated $1,500 a year. The amount is set by the PGA and the IRS. And then I am going to show you, I'm going to try and share a screen with you if I can. Oh, I lost my sharing ability.
Well, you're sharing, Kathy,
Yeah.
you're currently sharing that screen. So you could just click on whatever it is, maximize whatever screen you want to show that you have minimized on yours.
Oh, gotcha. Okay.
If you've got it, just grab it.
Yep, I'm going to grab it. Hopefully you guys can see this screen. This is the screen that's showing your deferred comp points. This is what you can find in your member benefits section in pga.org. You go to resources, member benefits, deferred comp, and it'll show you the activities. The key here is you want to see the activity that's listed. It gives you a description of the activity and what it entails. And then how do you get 100% points? And then this is key. You potentially can get 50% points and 25% points for some activities. So you might be, for example, a PGA Junior League team coach, and you're the coach for a team. But if you support that team or that coach, you potentially can get partial credit, partial points, which then may add up and get you over that 200 point minimum. This is the key. And these are the points associated with each activity. So again, you can see this chart in your member benefits section of pga.org. Any questions on an activity that you do. You know, I do this activity, but I can't see where it falls in. This is something you want to ask the PGA. They will make a determination, does it fall under this activity or not, and how to get it logged in. You would email deferred compensation at pgahq.com. Again, any questions on deferred compensation, you can email deferred compensation at pgahq.com. Again, that's also in the resources under the deferred comp section for you. And again, this is every year. So again, the new year, those of you doing the activities, the new year did just start April 1st. Those of you who did the activities last year, just an FYI, you will get you'll get your deposit at the end of June. It always comes June 30th. You should receive an email from Corebridge around the end of June letting you know this is going to happen. If you have a deferred comp account and it's new, we will try and call you. You should log in. No beneficiary is going to be listed on your account. So that is an important part that we do want you to get added into your account. All right. Now, Golf Retirement Plus. A lot of you may have already heard of this program. It is a way for you to save for retirement through shop sales. There's a lot of information on Golf Retirement Plus and how you can participate. Just as a full disclosure, if you guys see the QR code here that's showing up, that is the QR code for the deferred comp. It brings you to deferred comp in pga.org, just so you know. So Golf Retirement Plus, again, is a personal account also. You can make personal contributions to it. You can't participate with the sponsor companies in the program. You can still participate in Golf Retirement Plus, either through personal contributions by yourself. We also have personal sponsors who contribute for you. Premier Golf, Open Rounds Away Play, and the Office Depot retail card. So there are ways for you to just do it personally. Your employer can also make a contribution to your account for you. They want to give you a bonus, but not necessarily write you a check in hand. They can send a contribution directly to a Golf Retirement Plus account for you. And then the way the program mostly is used is through Golf Retirement Plus with the sponsor contributions. This is something that is open to all PG members, again, Class A, Class B. It is a shareable program. So not just one PGA professional or associate at the facility participates. It can be shared amongst everyone. It's a great way to retain employees, reward them for their work. If you have a Class B professional and like, okay, you're working towards Class A, I'll give you a percentage when you reach that status. They've been there, someone's been there for 2, 3, 5 years. You know what? Let's give you a percentage. You're doing a great job. So it is a good way to retain your employees through the sharing process. The sharing process is done annually. So it's not set in stone, can be changed at any point in time also.
So Kathy, how does that differ for golf professionals that operate golf retail operations for a management company?
The management companies, they're different. So if you work for a management company, you have to make sure you have permission to participate in Golf Retirement Plus. Some management companies allow it. Some management companies don't allow it. So it's just a question of you figuring out. Some of them I know right off the bat. You tell me who you work for, I can say yes or no. Some of them are new. I haven't heard about them. You just have to find that right person that says, yes, you can participate. Most management companies want to take discounts, fully understandable. There are a majority of the companies in the program that don't affect discounts to the shop or the facility. So those are the ones where if you work with a management company, those are the ones we'd probably focus on, seeing if you can participate with them. And again, the management company every year would have to allow you, they sign off on it every year through the forms that the PGA requires. So it's not going to be a shock each year.
Are you talking about the facility authorization agreement?
Yeah, I'll show you that in the next few slides. But yes, every year the PGA does require a facility authorization agreement, even if you're the owner of the shop. That form is required every year by the PGA. It's what we consider your deposit ticket. It tells the PGA if money comes into your account, please deposit it to your Golf Retirement Plus account. Because what happens, go ahead.
Sorry, and you said it doesn't affect the discounts?
Most of the companies don't affect the discounts. There are 9 companies where discounts may be affected. Those are companies where I always recommend that the PGA professional talk to the sales rep on participation options, because the owner, management company, whoever it may be, may not want they may want their discounts. And so you either just stay away from these 9 companies, or you just see how you can participate and then talk with your owner manager. So there are over 30 companies in the program. And again, only 9 of them really affect discounts. On the basis for management companies, there is an additional step that if you receive approval to participate and you can affect discounts, you always just want to make sure that you're not affecting any additional agreement that management company may have with companies. So that's always a disclaimer we always put out to the professionals before they enroll. Make sure you're not affecting discounts in any way if that's what your owner or management company prefer. Okay?
Yes, thank you.
All right, no problem. All right, so, and this screen is basically showing you always want to save. No matter when you start, how early you start, the earlier start, the better you are off with hopefully making your money grow for you. That is our goal. We're financial professionals. We want everyone's money to grow. The earlier you start, the more chance you have gaining more money. You don't have to start with the $150 in the example. Even if you start with $25 a month, savings and having it grow is always beneficial. Quite honestly, even if you start in your 50s, something is better than nothing. I always say, always start saving when you can, as soon as you can, and it'll help you in the long run. These are the forms, just so you know, that are needed each year. Again, these forms that people sign and send in do not hold with the companies. These forms, again, are only the deposit tickets to the PGA, because what happens is when the professional enrolls with the company sends the money directly to the PGA. And at the end of every quarter, if money came into the professional, this form is the only way the PGA will deposit it to their Golf Retirement Plus account. If money came in and this form is not on file, the money then just pens. It pens at the PGA waiting for this form to come in. So if you forget your form for a quarter, you haven't lost anything. It just hasn't been deposited into your Golf Retirement Plus account. It's not in the market. It's not working for you, but you haven't lost anything. So this is the importance of these facility authorization agreements. It gets your money deposited into your account.
Now, Kathy, you say it's not, you say you don't lose it, but it's also not growing for you because it's not in the market.
It's correct. It's not growing for you. It's just, it's pending over at the PGA, waiting for it to deposit. So if you got like a $500 deposit from a company in March and you don't have your facility agreement on file, and then you get it in June, it'll deposit, but it'll just deposit as $500. It's not like it's going to grow there. So that's the importance of keeping these forms on file each year. You get your deposits timely, and then they get in your account and they can go into the market and work for you. And again, these forms are required each year, regardless if you're the owner or not. And then this is the important part right down here. If you all can see it under the partner programs section in this form, these are the 8 companies. This actually form is old by 2 weeks. Shipsticks is on there now too. There are 9 companies. These are the 9 companies that may affect discounts to the shop or facility. They're the bigger ones, mostly, just in case you can't read it: Adidas, Callaway, Cobra, FootJoy, Strixon, TaylorMade, Titleist, US Kids, and Shipsticks. These are the 9 companies where, again, you either just stay away from them if you don't want to affect the discount to the owner management company, municipality, or you talk with them and check out your participation options. This form right here will be used only if there's sharing at the facility, the incentive allocation agreement. This one is going to show the PGA how to split contributions. So only one person's going to get enrolled at the facility. So let's just say John and I are at the same facility. John's going to enroll with all the companies, and the companies are going to send the money directly to John. But the incentive allocation agreement that we put on file is going to tell the PGA when that money comes in, how to split it between the two of us. It can be split between 5 people, could be split between 10 people, as long as they're PGA professionals or associates in good standing at the facility. Okay. And then in the difference between deferred comp and golf retirement plus, there are differences in your investments. For deferred comp, to go back to that, you're in mutual funds in that account, and you can invest within, it's about 35 different mutual funds you can invest in. Whereas golf retirement plus, that is a non-qualified deferred annuity account. That basically means it's after-tax money. How that does work is when the contributions come in from the facilities, it deposits into your golf retirement plus account as after-tax money, because what the PGA does is they'll send you a 1099 for any contributions that are received that are over $600. The golf retirement plus contributions are taxable. So if you do receive a 1099 from the PGA from golf retirement plus, you got to report it as income. You know, give it to your accountant, TurboTax, however you guys do your taxes. Golf retirement plus is taxable. But again, when the money deposits to your golf retirement plus account, it is coming in as after-tax money, so you can't get taxed twice on those contribution amounts. What happens in golf retirement plus is you are tied to the stock market. There's about 20 sub-accounts you can invest in. They grow tax deferred. Don't owe any taxes on anything until you take the money out. You can take this money out. Golf retirement plus, you can take out whenever you want, with 2 understandings. You owe taxes on any gains made in the account. And if you take money out prior to 59.5, the government imposes a 10% penalty on those gains. They want everyone to try and save for retirement is the goal. You can use a service we have in Golf Retirement Plus, the guided portfolio service. That's where the professionals, Morningstar Investments LLC, will come in and they'll balance your account for you. They'll manage your allocations. It's free while your account's under 5,000. There is a charge when the account goes over 5,000. So that's a choice you can use or not use. Again, the Golf Retirement Plus account is your account. It stays with you. No matter where you go, this is personal, not required to close it at any point in time. And then the resources that you have for Corebridge. Oops, sorry about that. When you have an account established here, again, when you open an account for Golf Retirement Plus or Deferred Comp, if you have both accounts, you'll see both accounts at the same time. So you'll be able to see both accounts. You can see them in the mobile app or on the website. We do try and make it easy for you to see those options. You can make changes in your investments in Golf Retirement Plus or Deferred Comp online, or you can give us a call. We can also help you change those investments. If you have other financial needs, we are here for you. Again, even if you can't do Golf Retirement Plus, you don't want to open a Golf Retirement Plus account, you don't do the Deferred Comp activities. If you don't have either one of those accounts, we are still here for you. We can help with guidance for anything outside. Do you need an IRA? Do you need a Roth IRA? Do you have an old 401k sitting out somewhere and you don't know what to do with it? We are here to help. We're here also if you need life insurance. We can help give quotes on life insurance and financial planning for your whole family. We are here just to basically get everything set for you, get you a retirement plan, and make sure you're on the right road to retirement so everyone can retire as early as possible. These are the Golf Retirement Plus deferred comp specialists that are in the program. There are 4 of us just specifically assigned just to the PGA group, just so you're aware. So I am in Florida. And then there's Tracy. Some of you know Tracy. She's been with the program for, I think at this point, over 15 years. And then there's Justin and Michael. We all answer the phones. So if you are all in California, you can call Justin, but I am more than able to help and answer any questions for you in California or any state. Tracy and I can do any state in the country. We're licensed everywhere. And then Michael and Justin are just in their respective regions. But again, we can answer any questions for either Golf Retirement Plus or deferred comp. If you need them, these are let me just go. Yeah, if you need them or want to talk with us, over here, I don't know how big they are on your screen. Over here on the QR codes next to our pictures, those are the codes if you want to schedule an appointment. You can it brings you to our appointment links and you can schedule a day and time that's good for you. And then also you can just feel free to give us a call. If you click on this QR code, just so you know, it's the enrollment page for Golf Retirement Plus and deferred comp. And then this is just the basic highlights of the programs and what is good to remember about each one program. Again, deferred comp, all PGA members, Class A, ability up to $1,500 a year. You have all the activities listed out that you can choose from. And then the key, log those activities in within 60 days of completion. Again, any questions on deferred comp, I can answer some of them, but if you have questions like, I don't know what the activity counts or how to log it in, again, it's deferred compensation at pgahq.com. And then finally, Golf Retirement Plus, again, open to all PGA professionals and associates. It's shareable. And the key again is the facility authorization agreement does not enroll you with the companies. I think I did forget to say that the enrollment information is in pga.org. Under resources, Golf Retirement Plus, partner programs, you click on the company you want to enroll with and it tells you what to do. It tells you how often the company makes contributions. Some are quarterly, some are only annually. It tells you if there's a form to fill out, contact your sales rep or a link. And it tells you sometimes how to participate. Is there a minimum? If tiered level, this percentage, you order this much, you get this much gives you a different percentage. So that again is all found in member benefits. And then also with Golf Retirement Plus, the good thing too is in your member benefits section, you can see who you're getting contributions from. I always recommend looking at this yearly to make sure you're getting the contributions from the companies you're expecting. That way, if you enrolled with someone and you didn't get a contribution, you can contact your sales rep to find out, hey, I enrolled on such and such a day. I don't see a contribution. And then your sales rep can investigate what's going on. And again, then the QR code, if you can see it, that brings you to the member benefits page in pga.org.
So Kathy, real quick, the facility authorization agreement needs to be completed every year between PGA member and the PGA of America. Then deferred compensation needs to be reported to the PGA within 60 days of completing the various activity. And then with the vendors for the Golf Retirement Plus, that needs to be done also annually or just one time?
Most of them are just one time. I'm going to bring you back. It's going to be harder to see if it's small, but on the facility authorization agreement on this page, if you can see it right here on the left-hand side, there's annual enrollment. There are 6 companies that, 7, Sunday Red's annual. There are 7 companies that are annual, and they're the bigger ones. Adidas, Callaway, Cobra, Mizuno, Srixon, Sunday Red, and TaylorMade. So those companies you have to enroll with every year. Most of them, you just talk to your sales rep and either they'll do what they need to do or they'll send you the link or the form. Whereas all these other companies, as long as you stay at the same facility, you don't have to enroll with them each year. If you change facilities, however, you have to re-enroll at your new facility.
So what happens to the contributions from, let's say, a PGA professional moves on from a facility, but the manufacturer doesn't require an annual re-enrollment form? The manufacturer is going to continue sending money to the PGA for that particular member, even though he's not at that facility, correct?
That's where we come in. We do get notification of most changes to facility changes. It's also on most of the forms. It does say if you change facilities, you need to re-enroll. We do try and contact left. They need to contact the sales rep. Hey, this was my last day. We'll contact the new professional. Hey, can you do Golf Retirement Plus there, and then get them started in the program, or have them discontinue contributions at this time if there was a change for whatever reason.
Thank you.
Okay. All right. Are there any questions from anyone? I don't know if you have a chat.
We do. There's no questions in there, but I've been asking, I've been hitting the FAQ list along the way. So you've been answering, I believe, the majority of the questions that the field would have. You know, a lot of this stuff is so easy, but because you know, it's foreign to a lot of us, it's not utilized. But the systems are there, the support is there, and you know, grateful that you're walking us through this.
Yeah, the one thing I do want to, the one frequently asked question, and what I run into a lot is the PJ professionals, they are limited on time. Time is a factor, and I get it. It's a very busy time for everyone. Some facilities don't have an off time. Golf retirement deferred comp, pretty simple. You can just log it in your member app or in pga.org. Golf Retirement Plus, you do have to go through a 3-step process, just so everyone's aware. You send in your facility authorization agreement. You speak with one of us and get your account established. It takes about 10-15 minutes over the phone, and we send you the form via DocuSign. And then the important step, enrolling with the companies in the program. So again, Golf Retirement Plus is a 3-step process. Your first year is your paperwork year, but after that, it's pretty seamless. So that's where for Golf Retirement Plus, I don't have enough time. I don't have time. It does take a little bit of time, but it can be done like in steps, just so you know. Okay.
Is that that's the last slide there, Kathy?
Yeah, that is, well, I went back. Yeah, this was the last slide. This is our disclaimer slide. So you have it.
Fantastic. Well, like I said, we're going to upload this to YouTube, and we'll send the link out to all the PGA members that joined us this morning. And on behalf of the Education Committee for the section, thank you so much, Kathy, for joining us and walking us through this. Very important for all of us, obviously, that these resources are there and that we know how to fully utilize them. For all the PGA members that joined us this morning on the webcast, you will receive 1 PDR credit towards your continuous education. Thank you very much for supporting the Catalyst webinar series. Kathy, thank you for your time. Have a great day, everybody. Take care.